Hello, and welcome to this webinar that is presented by the IFRS Foundation. I'm Roberta Ravelli. I'm a technical staff at the IFRS Foundation, and I am your host for the webinar today. First of all, some housekeeping element. Please ask questions by clicking the Q&A button in Zoom. Focusing on today's theme, that is climate-related targets and transition plans disclosure. We will probably not be able to answer to all the questions today, and some of the questions might even be outside the scope of the topic that we are discussing today. But we will consider all the questions in our educational efforts, including our webinars and other communication going forward. This webinar is being recorded and will be available on the IFRS Sustainability Knowledge Hub. We have closed captioning enabled, so you can turn it on in Zoom. Live closed captioning isn't 100% accurate, but we hope that it helps with the accessibility of today's content. And another quick disclaimer, the information and topics discussed during this webinar do not constitute implementation guidance by the IFRS Foundation. So a big welcome to everyone joining live from around the world, as well as those that are listening on demand. You can see here what is the summary of registrations so far. So we have over 2,750 people from 130 countries, spanning corporate sustainability officer, consultant, and finance and reporting executives, as well as the accounting profession and academia. As we go along, we will post links to resources in the Zoom chat, and we will also send those resources in a follow-up email along with a copy of the slides that we are using today. Before we meet our speakers for the webinar today, let's take a quick look at the key topics that we will explore in this session. As shown in this slide on the screen, we are focusing on how companies set, implement, and most importantly, from the ISSB perspective, disclose climate-related targets and information about transition plans. We will touch on how these plans are governed, aligned with business strategy and financial goals, and how progress is measured and reported. This sets the stage for the panel conversation that you will hear shortly. So now, who will be our speakers today? So who are the people that are joining me in this webinar? To lead off the discussion in a moment, we have Richard Barker, who is a full-time member of the International Sustainability Standard Boards, or ISSB. Richard has an extensive experience in corporate reporting, accounting standard, and sustainability disclosures. Before joining the ISSB, he was a professor of accounting at the University of Oxford and contributed to several advisory and standard-setting bodies in the UK and internationally. And I also want to welcome our guest speakers who will bring expertise from different perspectives. So today I'm joined by Lois Guthrie, who is a senior specialist at the UN Sustainable Stock Exchange Initiative. Then we have Luke Plower, a senior manager, corporate performance and accountability at the World Business Council for Sustainable Development. And Ira Poensgen from the International Transition Plan Network, or ITPN. And Ira has also previous experience working with the Transition Plan Task Force as a technical lead. So before we open the discussion, I would like to take a minute to tell you about the new resource from the IFRS Foundation related to transition plan disclosure that has actually inspired the topic of this webinar today. Few weeks ago, so on the 23rd of June, the IFRS Foundation has published a new guidance document that is titled Disclosing Information about an Entity Climate-Related Transition, including information about transition plans in accordance with IFRS S2. This document provides guidance to companies that are applying IFRS S2 as providing a source of inspiration for aspects that companies might determine that are relevant to disclose when applying IFRS S2 if they are pursuing a climate-related transition, including the role of targets, action, and resource development. I think it's important to emphasize that IFRS S2 does not require a company to have a transition plan. However, if the company does have one or is taking steps consistent with a climate-related transition, it discloses material information about it in line with IFRS S2 overarching focus on providing decision-useful sustainability-related financial information for investors. Let me maybe briefly walk through how the IFRS Foundation has structured this guidance document to support disclosure on an entity climate-related transition applying IFRS S2. As many of you may know, this guidance is part of the ISSB commitment to supporting effective implementation of IFRS S1 and IFRS S2, particularly IFRS S2 in this context regarding climate-related disclosures. So the structure of the guidance follows closely the architecture of IFRS S2 and is organized around the key disclosure content areas of governance, strategy, risk management, metrics, and targets. And each section of the guidance maps directly to these pillars in IFRS S2 and highlight which are the relevant requirements in IFRS S2 that are linked to an entity climate-related transition, with more content for entities to consider for the strategy pillar rather than other pillars like governance or metric and targets, considering the strategic nature of the climate-related transition. And another aspect to mention regarding the structure of the guidance is that this guidance builds on the work of the Transition Plan Task Force. So it builds on the TPT disclosure framework and links the requirement in IFRS S2 to the 5 elements of the TPT disclosure framework related to foundation, implementation strategy, engagement strategy, metrics and target, and governance. And you will find in the document, so in the guidance document, an appendix with the mapping showing the correspondence between the requirement in IFRS S2 and the element of the TPT material. And we think that this mapping might help companies that are already familiar with the TPT framework or have used it for the development of their transition plan, so that when companies apply IFRS S2, they can leverage on the work that they have already done in the context of the objective-oriented and efficient reporting. The guidance also includes some sector-specific examples that are inspired by the TPT legacy material. But it's important to mention that the guidance does not introduce any new disclosure requirement. So the purpose of the guidance is really to support the application of what is already in IFRS S2. So the requirement that matters are those in IFRS S2, but at the same time offer illustrative example and explanation of what type of information entities might determine it is relevant to disclose about their climate-related transition, even in situations where they don't have a formal transition plan. The guidance reinforces that transition plan disclosure, like any other disclosure prepared applying IFRS S2, are to be part of an entity general purpose financial reporting. And the entity can consider cross-references to formal plans, but provided the sum of the criteria explained in the ISSB standard are met, including the fact that the reference content is available on the same time and with the same terms. So in developing this guidance at the IFRS Foundation, we really hope that the structure could make the guidance technically robust and practically usable. And we encourage particularly preparers and jurisdiction to use it to promote consistent and high quality disclosure. The last things that I would mention in commenting on this slide is that this guidance is focused on disclosure of information. And this is very much in line with the remit of the ISSB and its standards. But this guidance can complement materials that might be provided by jurisdiction and others that might establish requirement for companies to have a transition plan, or a requirement that might prescribe the content of such transition plans. So you don't find these in this guidance, but there are other organizations working on that. And with this introduction, I would then start maybe the conversation with Richard, that was very much involved in the development of this guidance. Richard, I wanted to ask, how are you seeing the role of climate-related transition plans evolving in response to growing investor and regulatory expectation? And also, given your involvement in the development of the guidance, why do you think that the IFRS Foundation decided to publish this guidance now? And what may be key problems, if any, or misunderstanding this guidance is aiming to solve among different stakeholders, or preparers, investors, or regulators?
Sure, thank you, Roberta, and thank you to everyone who's online. It's great to have such a high attendance and interest in this topic. So the role of transition plans, as I would see it, is pretty central to sustainability-related disclosure, financial disclosure. You know, sustainability in a sense is all about transition, right? And in particular, climate-related transition. Going from a low carbon, the economy we have right now to a low carbon economy is a dramatic and substantial global transition. So it's not surprising that investors and indeed also regulators are asking not just for information about sort of vague promises and commitments, but demonstrable action. How are you going to get from here to there? What's your governance structure? What resources do you have to be able to achieve that? On what timeline, and so on. So good transition planning and disclosure in that regard is a signal of credibility of corporate planning, of corporate understanding of the transition that lies ahead, the opportunities and the risks that are inherent in that transition, and so on. So we're moving from a world in which investors want to have, investors currently don't have enough consistency and comparability in disclosure. And want to see more of that. And meanwhile, at the same time, preparers need greater clarity on, well, what should we disclose? How should we do it? And that should include preparers who are new to the game, as it were, and maybe haven't even thought about formalizing a transition plan yet. And all the way along the spectrum to those who are far advanced in the process. So there is as with all our work, there is a mutual benefit between companies and investors in higher quality reporting. There is a lower cost of capital for entities in reporting to investors who better understand the risks and opportunities that they're investing in. So that's what it's all about, and it's a very sort of topical and timely set of considerations. Now, why now? Well, Roberta's mentioned in part, we are consolidating the really helpful foundational work of the Transition Plan Task Force. And critical to the work that we are doing in general, the highest priority of our work agenda at the ISSB is supporting the implementation of S1 and S2. And so this material is really important in that broader implementation context. So, for example, the guidance that we've issued clarifies that S2 does not require entities to have a transition plan. It requires information about the plan to be disclosed if the entity does have one. It provides a clear framing for what constitutes a climate-related transition from a disclosure perspective, and aligns that framing with the structure both of S2, which itself is built on TCFD of governance, strategy, risk management targets and metrics, and with the TPT's 5-element structure as well. So there's a consolidation going on here. You know, part of our role at the ISSB is to consolidate and simplify the standards, the guidance, the frameworks, and so on that are out there. So this should help prepare us to understand what to disclose, whatever stage they are in the process of transition planning. One more thing to say is it reinforces, and this runs throughout all of our work, but it reinforces the importance of materiality from an investor point of view. So one can think about transition planning purely in terms of investor-oriented information about risk and opportunity. One can also think about transition planning from a broader public policy target towards net zero kind of perspective. It's the former that's our perspective, right? So clarifying that the information here is being disclosed insofar as it is material to investors. In other words, reasonably capable of affecting an investment decision. Roberta, let me turn the question back to you now. So the guidance that we've put out uses the language climate-related transition, and of course, simply by applying the existing requirements of S2. An entity that has transition planning in mind, in whatever form it is, even if it doesn't have a formal transition plan, is disclosing information that is closely related to transition planning in its S2 disclosure already. And of course, we don't tell an entity how to do its transition planning or whether it should have a transition plan or in what form. So different entities will go about this in different ways. So the question for you, Roberta, how should preparers determine what information to provide about the plan when applying S2? And from an investor point of view, how can they assess comparability across disclosures?
Yeah, no, thank you, Richard. You know, when I was reading the title of the document earlier, I exactly noted the reference to the entity transition, so the climate-related transition. And this is a great question because, as you said, we are doing this to consolidate material, and in addressing the fragmentation of disclosure, our objective is to avoid that an entity that has set a target for its transition is required to report information about the target, any actions and plans in 5 different ways, applying 5 different frameworks. So we are really trying to address this risk of fragmentation. But we are not asking to entities to report information about the same target or the same plan, because the target or the plan will necessarily differ based on the entity strategy. So in that sense, the guidance needs to be used as an inspiration depending on what is the actual strategy of the company. As you said, the companies might be in a different stage. Preparer might be new to the game, just using the term that you mentioned earlier. So we recognize that entities that are at different stages of transition and they might have different efforts, might not take the form of a single formal document that is labeled as a transition plan. So this is why, in summary, we use the term, the broader term, climate-related transition, to capture a range of possible strategies, including mitigation, so responses to transition risk, adaptation, so to responses to physical risk, or a combination of both, because actually that would depend on the company's strategy. And I would say that what matters for IFRS S2 is probably not the label, but whether there is material information about how the entity is responding to the climate-related risk and opportunities. So, for example, if an entity has set GHG targets, committed capital to decarbonization, or began adapting infrastructure, those are the actions that fall under the scope of the disclosure, and we expect that will be disclosed if the information is material, as you said. So the guidance provides clarity on what disclosure should cover from different angles. So starting from governance oversight, moving to strategic alignment, actions underway, and also progress against metrics and target. And to your last point, the second question you asked regarding comparability, the guidance is structured around the disclosure requirement in IFRS S2 and also builds on the recognized element of the TPT framework. And this structure, we hope, will help users to navigate varying level of maturity and format and different stages of companies' pathway on the transition. But I think what is important for the disclosure is that they are present in a way that tell the story of the company, regardless of the structure of the paragraph in IFRS S2. So a narrative explaining the strategy and which are the relevant information, enabling investor to use this information for making the decision. So I think that ultimately the approach that we have taken in developing the guidance offer flexibility for preparers, while also giving to user a common disclosure backbone to work with. So in achieving transparency without sacrificing the relevance. So I hope that was, a comprehensive, I would say, analysis of why we structured the document in that sense. And Richard, if you agree, I would now ask to our co-speakers to join the conversation and turn to our panel to hear their perspective on governance structures, roles, and oversight related to sustainability-related risk and opportunities. And just a quick reminder to our audience that after this initial round of comments, we will have some time to discuss the questions. So please continue to submit them. And as I mentioned earlier, but just a reminder, we will share the slide and links to the relevant material to all participants after this webinar. And anybody can connect with us by emailing us at our email address, capacitybuilding@ifrs.org. Ira, I can see you on the screen, so I would like to start with a question for you, given, as I mentioned in a quick introduction, your previous work, I would say essential work with the Transition Plan Task Force, and your current work with the International Transition Plan Network. That is also known as ITPN. So ITPN was created for several reasons, but among other things, I think ITPN was created to steward the broader legacy content of the Transition Plan Task Force beyond disclosure. The content about disclosure is now part of the IFRS Foundation, but the legacy content other than disclosure include, I think, important elements like the transition planning cycle document that was developed by TPT, that is a useful tool for entities with their transition planning process. So I wanted to ask to you whether you can briefly explain for our audience how your role, so the work of ITPN, can complement the work of the IFRS Foundation, which is focused on the disclosure specific guidance applying IFRS S2.
Fantastic. Thank you very much, Roberta. So before I dive into that, I just want to say how thrilled we are at the ITPN that the IFRS Foundation has now finalized its education materials. We think that this document should give preparers that have and that continue to rely on some of the existing guidance in the space, including TPT, a whole lot of comfort that they can integrate any disclosures about the work that they've done into what they're already doing to disclose in line with IFRS S2. So the two really fit hand in glove together, which is really exciting to see. And now to answer your question, I want to touch a little bit about on some of the legacy of the TPT materials that, as you say, ITPN now continues to host. Last year, when the TPT, the Transition Plan Task Force, wrapped up its work, it handed over part of its materials to the IFRS Foundation, and those were all of the materials that were disclosure specific. So the various different documents that provide detailed guidance on how companies can report their transition plan, both at the sector neutral level, but there was also a suite of sector guidance that supported it. And now the TPT also developed additional materials beyond that. That was a program that went on for 2.5 years, and to support companies in developing disclosures, we also recognized that there is also a big question of how do you actually go about developing a transition plan in the first steps, and what are some of the steps that you might want to take into account as you go along that journey. So we worked with companies both in the UK but also internationally to really develop a really robust set of implementation guidance that can help companies get started and move along on that journey. And all of those materials are now still hosted on the ITPN global website. So importantly, the one that you mentioned was the transition planning cycle, which I think is probably the most relevant one here for your audiences as well. So that's a document that provides 4 kind of stylized stages of a process, all the way from doing your initial assessment of your risks and opportunities to setting your ambition, planning your actions, and then finally moving into the implementation phase. As a cycle that continues to iterate, and where companies can continue to learn and deepen their approach over time. And at each stage of that process, we give a bit of guidance from what we've heard from companies that have already gone through this journey about what are some of the considerations that they took into account at every step of the way, as well as a whole range of links and resources that are relevant, recognizing that the TPT wasn't the only one and isn't the only actor that has developed guidance here, but there's really I think by now a very robust ecosystem that can help companies get started and improve their approach. And so hopefully those resources are still publicly available. They can be found on the website and should hopefully be useful to those companies that are that have decided that they want to develop a transition plan. And now I want to say a little bit about the International Transition Plan Network as well. So the ITPN is a new initiative. It was launched at the end of last year. It's a network that supports the development of global norms around transition plans, primarily by bringing different policy audiences around the world together. So it's a growing network. So we have leaders from over 30 public sector organizations, from finance ministries, regulators across Africa, Asia Pacific, Europe, North America, Latin America. And that is then further supported by a global community of civil society, academic experts, and some private sector conveners as well, including, for example, the IFRS Foundation, who is an official observer to the ITPN. The complementarity here to the work that you've done is that ITPN isn't planning to develop any standards or any market-facing guidance ourselves. What we do want to do is facilitate the conversations with governments, with regulators across regions, focusing on how the different standards and levers that are available can be brought together, fostering more consistency, with the key goal being here that we want to support the development of global norms. Again, all in the effort to avoid further fragmentation in the space, which at the end of the day, the reason that we're doing this is to make this easier for companies, particularly those that might be operating or have value chains across multiple jurisdictions.
Yeah, thank you. Thank you very much for explaining the role of ITPN. I wanted maybe to ask to you in detail what is the benefit that you think preparers can get from the work of ITPN, given the rationale of facilitating the dialogue between government and regulator. But I think you already covered that topic. And thanks also for explaining the complementary role that our respective organizations are playing. And I think talking about collaboration and complementary roles, the UN Sustainable Stock Exchanges Initiative is also playing an important role. And we have Lois joining the webinar. And so, Lois, I wanted to ask to you, noting that a few days after the publication of the IFRS guidance document that I have mentioned earlier, the UN Sustainable Stock Exchange Initiative has also launched an important guidance, a new document that is called Model Guidance on Climate Transition Plans. We can see the cover on the slide. And this was, correct me if I'm wrong, developed in collaboration with global exchanges to help issuers understand and disclose credible transition strategies in line with evolving climate expectation. So the model guidance, I think, aims to build a market-wide readiness and aligns with the investor calls for improved transparency and comparability that Richard mentioned earlier. So given that IFRS S2 requirement and the new IFRS guidance document focus on disclosures relevant to an entity climate-related transition, how do you think that the UN SEC framework complement this effort? So in what ways do the two approaches reinforce each other, and where you might see that the documents serve different user needs?
Thank you, Roberta, and thank you very much for sharing the details of the new model guidance on climate transition plans. As you rightly say, its purpose is to support listed companies through their relationship with stock exchanges in preparing credible and transparent transition plans. There is a chapter within the guidance on disclosure, but the way it complements IFRS S2 and the work of the IFRS Foundation is that it also helps issuers to understand why transition plans matter and what active planning steps they can take. So there are chapters that focus more on the act of transition planning. Also, as Richard said, a part of the purpose is to consolidate and simplify a lot of the guidance that is already in the public domain in the interests of building awareness and education. So the SSE guidance covers practical implementation and lists the hallmarks of credible transition plans, which we've taken from resources that are in the public domain. So you'll find in the guidance nearly 200 references to materials and resources that can help companies with their transition planning. One of the differences between the two guidances is I really appreciated seeing in the IFRS Foundation guidance a number of sector-specific examples which were beyond the scope of the UNSSE guidance, and we know very much from the training we do at the UNSSE that examples are very, very much appreciated by companies, and of course we know there are other super examples in the public domain from We Mean Business and the World Business Council for Sustainable Development. So of course, to end, these two documents together bridge ambition and disclosure, with IFRS S2 setting out the formal requirements for disclosure and the Sustainable Stock Exchange model guidance building understanding and capacity in the actions and planning activities. Of course, there's always more to do, and eventually I suspect our attentions will all turn to how climate transition plans are integrated with other types of transition, but that's for another day.
Absolutely, and actually that was one of the questions that was submitted on the Zoom chat. So I might come back to you on that topic. But continuing on the role of UN SEC, given the focus on capital market infrastructure, I wanted to ask, how do you think the exchanges can encourage better disclosure without creating a one-size-fits-all model for governance or transition targets?
Yes, thank you, Roberta. Well, exchanges do play a critical role in guiding companies towards climate-related disclosure without prescribing uniform models or targets. And therefore, the model guidance is principles-based and flexible. and recognises that companies operate in different sectors, geographies, and different regulatory environments. So actually, it's a template document to which stock exchanges are invited to add details that are particular to their own jurisdictions and their own issuers.
Thank you. Thank you very much, Lois, for the perspective. And you already, I think, mentioned earlier the role that WBCSD is also playing in this context. And so it's the perfect opportunity to bring Luke into the discussion. So bringing the corporate perspective. From a corporate perspective, Luke, what are some of the internal challenges in formalizing a climate-related transition plan, especially when a company is active across different jurisdictions and regulatory frameworks? So which type of experience can you share with us?
Thanks so much, Roberta. So yes, I work with companies on transition planning to highlight a number of key internal business implementation challenges, namely understanding, prioritizing climate-related risk and opportunity in a way to enable strategy development and strategic resilience, thinking through transition plan resourcing and integration into financial planning, how to accelerate innovation in low carbon products and services and that development, value chain engagement and the collaboration that's required there, and then also the assessment and management of key dependencies. So just a couple of words on those 5 themes. The assessment of climate risk and opportunity, that needs to start to capture something of the velocity and scale of the transition that's underway, and also some of the physical changes. Scenario and sensitivity analysis can certainly be helpful in that context, but that comes with challenges, of course, when you're looking across countries and regions and products and markets. So there's things to be done there to help companies. On financial planning, we're seeing companies at different stages of how they kind of calculate the costs and investments, potential revenues linked to different transition levers, and how they can integrate them into, a framework that supports budget and capital allocation. On innovation, we need to see more of the integration of climate impacts into product development and using life cycle assessments, life cycle analysis that then thinks through what are the alternatives on different products and services. On value chains, we need to understand the different emission profiles and the distribution prioritization through a value chain to then support meaningful engagement and partnership. I think on your comment on the jurisdictions and regulatory frameworks, I think that's particularly important on the dependency side. We're working now more on this, leveraging work from Oxford University and others to think through what are the policy enablers, market conditions, technological developments, infrastructure needs, resource availability. There's a lot of conditions that are needed to support companies through their transitions. So having a pragmatic way that can allow for the assessment and management of those dependencies is really critical. And then maybe just to complement, so those are kind of implementation, transition planning cycle, integration challenges. There's of course some kind of more fundamental, foundational priorities on stakeholder engagement, data management, understanding disclosure infrastructure needs. There's a range of stakeholders, of course, that need to be involved in transition planning: strategy, finance, sustainability, operations, supply chain, R&D. I could go on, and that's just internal. There's also the different external relationships that are very critical. Data systems absolutely have to evolve and advance. How do we think about different needs for different transition levers and the disclosure guidance? And then, of course, more the remit of the ISSB and all the preparation and prioritization that's needed for disclosure. How do we kind of integrate into the control systems, assurance preparations, management, accounting, etc.? There's practical implementation steps there too. And if I may, just last comment here, please do take a look at our resource titled Moving Transition from Plans to Action, a transition planning primer, which unpacks more of these challenges and practical steps that companies can take.
Thank you, Luke. And yeah, talking about resources, you mentioned a lot of possible challenges, a very comprehensive overview, but we are also here to help. And there is often a gap maybe between the corporate climate ambition and what is actually disclosed in transition strategies. And that might be for a series of factors, for example, uncertainty, complexity, or lack of clear guidance. So in your organization, I wanted to ask how has WBCSD supported its members in aligning the climate-related targets with financial goals and possibly in disclosing progress in a way that is both credible and decision useful. So trying to balance this trade-off.
Yeah, thank you. So WBCSD has worked for many years with companies on kind of reporting developments and specifically climate-related financial disclosure, supporting CDSB and TCFD, the development and implementation there, and also early adoption of ISSB. We have a resource called Reporting Matters, and it's actually a kind of review process of disclosures that looks at different principles, content, and effectiveness criteria, showing trends and developments in reporting practice. That's been going for over 10 years, so looking at the kind of evolving landscape and practice in reporting. We convened TCFD preparer forums, and that involves collaboration even with panelists on the call here today. Lois was a former team member within WBCSD working on those TCFD preparer forums, and we looked at how do you think about risk and opportunity assessment, strategic resilience, metrics, and we collated a whole range of suggestions and examples from leading real economy companies across over 50 companies and more than 6 sector groups conducted. We've also looked at how do you sort of build out greater connections on evaluation and financial impacts and uncertainties in disclosure. So how do you look at climate and corporate finance methods for investment appraisal? How do you use estimates and assumptions when preparing disclosures? And how can you consider climate connections in financial statements? We also have dedicated work on decarbonisation and net zero, guidebooks, and a climate drive online tool. And WBCSD probably best known for its work on greenhouse gas standards and guidance, but then more recently actually has added work on intervention accounting and avoided emissions, so to understand more of the decarbonisation contributions that company solutions can provide, so not just the kind of inventory GHG accounting. And just last reflection perhaps is your point on decision useful information. That's of course often used, but I think we need to be a bit more precise about what decisions and by whom. So how are different types of investors with different strategies and processes using the information that's provided by companies? For example, how does climate risk and opportunity feature in the fundamental active equity research and investment that could affect market valuation? How are transition plans connected to different types of transition finance, fund construction or lending criteria? Or how could these avoided emissions measures support investment in climate solutions? And we're looking at this much more, but I think it's something that needs greater attention, including that kind of connection between preparers and users of information. And IFRS Foundation, of course, has a critical role to play there.
So thank you, Luke. There's a focus there, of course, on investor-oriented communication, but one of the things that is clear from the guidance is that jurisdictions might supplement IFRS S2 disclosure with additional requirements, as long as they don't obscure the IFRS disclosure. In other words, as long as the information that is material for investor decision making is clear and separable. So, Roberta, let me turn to you with a question here about how do you picture or how do you envisage jurisdictions in practice requiring disclosures that are in that space of being incremental to S2?
Yes, thank you, Richard. Exactly the reason for which we developed this guidance, really to build on the ISSB global baseline, so enable jurisdictions that are adopting or otherwise using the ISSB standard to use this IFRS guidance document to support the implementation of climate-related disclosure, knowing the different markets that are currently embracing the adoption of ISSB standards. But we also, I think, recognize that there are local circumstances that the different jurisdictions need to take into consideration. So in keeping in mind the objective of addressing the risk of fragmentation in disclosure, using the IFRS guidance document to achieve the global baseline, offer the opportunity then to build on top using what we call the building block approach. So still allowing jurisdictional authorities to add requirements in the context of disclosures that reflect the specific need of the jurisdiction or a broader, I would say, group of stakeholders beyond investors. So we really encourage jurisdiction to refer to our guidance rather than develop their own guidance to achieve together this objective of consolidating material, reducing fragmentation, and hopefully making life easier for companies that are operating at multinational levels, so operating in different countries. I was just keeping an eye on the questions that were submitted on the chat, and I think we have a few minutes for a couple of questions, and then, as I mentioned, we will follow up with additional resources on questions that we are not able to cover today. Linking to a point that Lois mentioned earlier regarding, of course, we are talking now about climate-related transition plans, but transition is a concept that might expand to other topics. So I wanted to maybe ask to both Lois and Ira, that might have a different perspective and different also working experience, how do you see the aspect of social or nature or just transition, all these topics that are associated to the concept of transition that might be related to climate related transition plan, but they are also separate aspect. In your respective work, do you have any, for example, plan to incorporate the notion of social in transition plan disclosure? Is one of the questions that was submitted by the audience. So if you have any reflection regarding the connection between climate and other topics in the context of transition, I'm sure that our audience would appreciate your perspective. Maybe just to give an order, up to you, would like to start first, but maybe Lois, if you don't mind, given that you mentioned the topic earlier, very quickly, and you said that we might need a separate webinar just for this.
Yes, I'll be brief, but I mean, I think, you know, historically the approach has been to take climate first for obvious reasons, but in my experience, usually people conclude that climate issues cannot be separated from other issues, and therefore, you know, it becomes necessary to have an integrated view of this. But I know at the IFRS Foundation, you have incorporated the work of the Integrated Reporting Council, and therefore this is where I think integrated reporting and its value creation approach and the way in which value is defined and related to the concept of sustainability can be very, very useful. The more I've looked into this, the more complicated I realize it is, but there's some very helpful tools and processes that can be used, which are referenced in our guidance as well. So ongoing work, I think, is the answer.
I think I can echo a lot of those points and just elaborate a bit on what it is that the TPT has done when it developed its materials. So we actually set up 3 specific working groups that we were asked to provide input as the TPT was being drafted and as the supplementary materials were being drafted on 3 wider themes. One of them was adaptation, physical risk. The second one was just transition and social related factors, and the third one was nature. Maybe just to briefly outline where we landed on those 3. Adaptation and physical risk, and this is something where I'm really glad to see that this is firmly reflected in the IFRS guidance here as well. where the TPT said if you're developing a transition plan and you're not thinking about how your strategy also considers the increasing physical risks that your company or value chain might face, then you're taking a very narrow view of what a transition plan should try and achieve. And physical risk and thinking about your adaptation related questions should be part and parcel of what a transition plan covers. So that's that's definitely something that's become a firm TPT view. And I think increasingly companies are also starting to recognize, and there's more work happening around it's not only establishing the principle that those two should be thought about together, but also then developing some of the supplementary guidance in terms of how can companies do robust physical risk assessments, and how can they make strategic choices about how to respond to physical risks they've identified. On nature and social issues and just transition, where the discussions landed at the same time was to include a recommendation that as a company develops a transition plan, they should be mindful that their transition plan can have impacts and dependencies on both the natural environment as well as stakeholders. And that can include, for example, workers, and you might be opening up new jobs as part of your transition strategy. There might be certain jobs that are being put at risk with that shifted strategy. It could include customers, it can include value chain counterparts. You might be making different decisions about where it is that you're sourcing raw materials from, for example, that could have impacts on local communities. And these are all factors that we encourage companies to be thinking about, and to be mindful of where do these give rise to possible risks and wider sustainability related risks and opportunities. And similarly with the natural environment, there's definitely a close interconnection there. I will say that there's also been increasingly work, or that is now underway, to think about what would more kind of, particularly on the nature side of things, what would a holistic nature transition plan look like. There's other initiatives that are doing some thought leadership around that, but that always went a little bit beyond the scope of the work that we were asked to do on a TPT.
Thank you both. I think a lot of food for thoughts for the preparers that are listening to the webinar. And I think we have time for one probably last question from the audience. And I think, Luke, this one might be one for you, because you mentioned that you have been working with preparers for many years on the topic of transition. So you might have observed different practice. And Richard mentioned earlier that in applying IFRS S2, companies are disclosing information about their transition strategy, even if they don't have a transition plan. If they have a transition plan, they need to disclose additional information regarding the assumption and the dependencies. One of the questions that we have received is whether in thinking about a formal transition plan, so kind of a separate document, not part of the general purpose financial report, the disclosure of information could be easier compared to the other options. So have you observed this in practice, or in your conversation with the corporate community, if there is a benefit in having a formal transition plan, maybe to meet, I don't know, needs of competitors, you know, when other players in your industry do that, maybe there might be a rationale for doing that. So
yeah, so having the kind of the formal and the formal transition plan, I do think it's helpful to work through all of the different elements and components laid out by TPT and then taken up by this IFRS guidance. So when you have that kind of dedicated output and the process to develop it, you will kind of think through all of those steps of, well, what's the business model implications? What's the framing on risk and opportunity? How do I look at products and services? How do I look at my value chain? How can I engage with government? How can I think about the resourcing of this plan? What's the governance of the plan? So it's perhaps more likely that you'll be able to cover off all of those kind of different key elements and components that allows for that kind of the business integration also. I do think Ira's comments earlier on the transition plan cycle, and then hopefully some of my remarks as well, is really emphasizing that the most value in this is the internal business process. Working through what the integration looks like within strategy, within the risk processes, implications of the business model, etc., etc. Then ultimately how you choose to disclose that is up to the company, and of course you take the guidance from the ISSB. But I'd really emphasize that the internal value and discipline that's really helpful for companies.
Thanks for sharing your perspective, and I think we can now move to close the webinar. That was extremely interesting, to follow the different roles that we are all playing, and maybe as a final comment on a topic that is also the subject of this conversation to you, Richard. When talking about IFRS S2 requirement, there is one aspect related to the disclosure information on the use of climate-related scenario analysis, and the new guidance, I think, emphasizes the role of the target and transition strategies in helping users understand entities' future resilience. How do you see scenario analysis interacting with the process of setting climate-related targets and monitoring progress over time?
Yeah, sure. Thank you. So, it can be quite overwhelming, all this sort of language of transition plans and scenario analysis, and at some level they all feel like quite separate and different and daunting things and so on. I think there's kind of two answers to that question. The first one is formally, there are specific requirements in S2 that relate to transition planning and transition plans. And there's a formal requirement in S2 as part of the strategy disclosures to do a scenario analysis, to explain how that informs thinking about strategy and business models and business resilience. That's the context for it. And then also disclosures about how the scenario analysis is done and all that kind of stuff. So in a sense, the technical answer to the question is they are distinct requirements. The more interesting answer, I think, and the more useful answer is that they are super closely related, right? That if you want to do transition planning well, you're going to do it better if you've done a scenario analysis and thought about transition pathways in the world out there, and so scenario analysis is an input into your transition planning, and vice versa. That you're going to do a better scenario analysis if you have some notion of what transition might look like. So, to the point Luke was just making about internal process, actually, imagine if you had an organization where scenario analysis is done in one part of the organization and transition planning is done somewhere else. It wouldn't be helping that internal process. So I think it's all part of a complementary iterative set of inputs into understanding sustainability related risks and opportunities and communicating about those, as Lois just described, in an integrated way to provide material information to investors.
Absolutely. Thank you. Thank you very much. And hopefully that's helpful for people listening in consider the integrated part of a process, not disconnected requirement to comply with. So thank you all really for this conversation and for your availability also to respond to the questions from the audience. And thank you to everyone who has listened and participated by submitting the questions. Before we close, I would like just to remind the listener about some of the key resources that might help you on your journey to implement the ISSB standards. So the IFRS Foundation offers a number of programs and resources, including our website and our Knowledge Hub, with more than 280 resources, both from the IFRS Foundation and our capacity building partners, some of which were participating in the webinar today. Then we have the IFRS Sustainability Alliance, so a membership program for education, tools, and peer networking. Then we have the Fundamentals of Sustainability Accounting Credential, or FSA, which instills the link between sustainability and financial performance. On that topic, we encourage you to join our webinar on the 23rd of July to learn about the FSA credential, the most advanced credential related to the ISSB standards, to hear from credential holders about how the FSA has helped them lead in sustainability-related roles across sectors, get practical tips on how to register, prepare, and access study resources for earning the credential. And finally, as another resource, our main website at ifrs.org, where you can sign up for alert and receive notification about the different activities that the IFRS Foundation is doing. And please remember that your use of our resources and participation in our programs also support our mission as a non-for-profit standard setter. So I encourage you to stay involved with the IFRS Foundation, including through this webinar series. Follow our LinkedIn and news updates to learn about our publication and project. You can also listen to the ISSB monthly podcast to stay up to date about development. And with that, on behalf of the team at the IFRS Foundation, I wanted really to thank you for participating. And until next time, thank you and goodbye.